Hello and welcome to another update video about FET. On the FET chart, price is still likely in this B wave. So we talked about, okay, a wave 1 might have topped in February 23, which is basically here a potential impulse. Not a beautiful one, especially due to what happened down here. But it's okay, I can get away with counting that as a wave 1, but again, it's not a super reliable one. Then the price came down into this support area. It reversed out of it, which is fantastic. These are typically the areas where we want price to reverse. So that worked out nicely. However, I warned you before that this is likely only going to be a correction, a corrective rally. Nothing impulsive is expected here, especially due to the move here. I mean, this is not a 5-wave move up here, yeah. It's a clear 3-wave move, so I'm counting that as an A wave. Yeah, it's an A wave, and then the move down was a B wave, and the move up now could be the C wave. Now, I had highlighted to you that the first warning that this B wave might have topped. So just to explain again, the move up as a B wave, yeah, A, B, C, and in the C wave we should have 5 waves in an ideal world. It would ideally get 1 or 2 more highs, but again, it doesn't need it. If it's a correction, it can always be a WXY or something. Therefore, we're tracking relevant support, and support is 22.6 cents. That also hasn't changed to the last video, but I highlighted to you that a first warning that this C wave of the B wave is over if we break below the ascending trend line. Now, it's only a very first and early signal, but below the 22.6 cent level, I have to assume that the B wave topped. Yeah, even below the standard Fibonacci resistance, which indicates a lot of weakness. And then it should come down. But as long as it's holding 22.6 cents, it can get at least 1 more high in a 5th wave of the C wave. Now, if it breaks below 22.6 cents, then it would most likely start the C wave to the downside. And this could then reach potentially first 13.3 cents, maybe even all the way down to 8.8. We can actually use the Fibonacci extension tool for that. Just roughly looking for the 1-to-1 ratio. That's actually even down here at around 8 cents. It's even below the 78.6 Fib level, which is not good, not good. So what I can tell you is ideally this B wave pushes a little higher so that the C wave has a little bit of space. Because if the B wave is very short, the C wave will run out of space and it might even drop below the 78.6 Fib retracement, which is what we want to avoid ideally if we want it to rally later in a 3rd wave, because below the 78.6 Fib level, it typically fails, yeah. These structures typically fail. Now, zooming in again, you can see how it's coming down. It looks a bit corrective on the way down, yeah. It looks a bit corrective, which is why I assume maybe this is the 4th wave. But I mean, it's a bit strange to count this. It might be a diagonal, which is unfolding here, but maybe this is a 4th wave. If it's a diagonal, we might want to consider I mean, again, the thing is, the 50% Fib level, it's not really confirmation if price breaks below it. Be aware that this is very choppy, again, this move up, so we might be dealing with a diagonal. So it might be worth adding the 61.8 retracement as support, because if I look at it and if I look at the subwave structure, then I can tell you that this could be a diagonal structure. In diagonals, you have to allow for deeper retracements. But I can tell you that below the 61.8 retracement, which is at 21.6 cents, yeah, I can't call that a wave 4 anymore. Then I have to assume it topped here in the B wave. So I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.